Hey everyone, it's Al Labaroa. It's Wednesday, it's April 25th, it's 2018, and I've got to sadly report that yesterday, the Miami Heat were knocked out of the playoffs in the first round by the 76ers. It was a great effort on the part of the Heat, but the breakdown in the third quarter, well, it was just one they could not overcome. So congrats to all the Philadelphia fans out there for advancing. Now, on the subject of breakdowns, the market is acting fairly weak, and before I dive into that, I want to point out that we've got a lot to talk about. I try to keep these posts to just about 3 minutes long, but today we're going to run over. But that's because the action yesterday was of critical importance in my opinion, and we've got a lot to cover. So I've been talking about leaks in the dam in regards to the markets, and I've suggested that all this recent volatility, well, it doesn't mean the market is melting. I actually said it was just noise. Well, we had a lot of noise yesterday, but this noise is not the one that we just brush off as just noise, but rather one that we need to carefully monitor. So let's look at what happened. The 10-year pushed to 3% yesterday, and that obviously helped the banking sector, right? Now, this is important to me because in both of last week's posts, I mentioned that the financials were putting a damper on the markets. Well, the areas that got some pain were the dividend payers, but only for a minute. I mean, they turned and rallied, and the logic here, I have to assume, is that rate hikes have already been priced into that. Now, what I find disturbing, and yeah, I just used the word disturbing, and perhaps that's too aggressive, so let me rephrase that. What I find concerning is that positive earnings got sold. I mean, big names got hammered. Friday, I said there was a lot of need for sectors to start participating and to give the market some legs if we were to have some meaningful upside. Well, they did the exact opposite. Not only did they not do any heavy lifting, they just flat out dropped. Technically, if we look at the market, we hit a high, we sold off hard, set a low at support, and then rallied, but not to its previous highs. This is what you would call lower highs on a charting pattern. And now we're pushing back and we're nearing a test of that key support at the 200-day moving average on both the S&P and the Dow. Now, if you're not sure what I mean, pull up a chart of the Dow. Look at the January 26th high and then the low on February 9th. Then look at that rally to the February 27th high, followed by that 329 low. Then we jumped up again on the 417 high, and we're back down at our current price level. So in my opinion, that's ugly. Now, the bright side is that the lows are holding. And while the financials are down, at least they're hovering around their 150-day moving average, right around in that general range. Now, however, a new leak has sprung in the dam, and that comes in the form of the semis. So pull up another chart and look at SMH. We had a big gap down on 419, I mean about 5% I think it was, and that was accompanied by volume, followed by 3 more straight days in the red on above average volume. Now, I know it's not quite Cinco de Mayo yet, but let me tell you something. That price behavior, that's not bueno. The one pillar of strength is in the transports, and they are having the least pain. And as I say this, as of this post at least, they're holding their 50-day moving average after bouncing off of their 150-day. And I find that impressive in the face of all the red behavior we're seeing everywhere else. Now, in my full financial intelligence training course, I talk about looking beneath the surface. So these are some of the key areas that I like to watch as a gauge for the market's health. I spend a great deal of time looking at markets' price behavior. And I want to remind everyone that from a trading perspective, most of what we see on a day-to-day basis, well, it's noise, right? You hear me say that regularly. It's important noise for trading, but it's less relevant to your portfolio management. Now, please recall that if you're thinking about trading or that if you're already trading, that your risk management discipline is of utmost importance. So listen to that noise, or at least be aware of it, right? I mean, remember, stock and stock option trading involves a substantial degree of risk. It may not be suitable for all investors. I'm talking charts here today, right? And I'm talking price behavior. But when you're looking at those charts, I want to remind you that past performance is not necessarily indicative of future results. We're using charts as a gauge. As an example, let's look at SMH again, right? The shredding that we witnessed of its 200-day moving average, it doesn't indicate the end of the world. It does, however, mean to me that upside in the overall market, it's going to be limited for the time being until this once leader, meaning the semis were leading, the leader of the pack, it can catch its breath. Well, if it doesn't catch its breath, well, it makes the downside that much easier to occur. Now, I tell you in my course that in strong markets, bad news is forgiven. That's something that we talk about. And we also talk about that in negative markets, good news gets sold. Well, this week on strong earnings, which is good news, it was followed by selling. And when I see this behavior coupled with the lower highs in the chart patterns, well, guess what? It sends off some alerts. Not panic alerts, but alerts that require extra attention. It's these signals that I encourage you to watch and be prepared for when things change. Now, I want to be clear. It's not necessarily that things are changing right now. It's that certain events are happening that could lead to change. Now, what you do ahead of time with your portfolio and your overall financial plan will make those shifts much more tolerable. As always, know your correlation risk. Be sure that the current DNA of your portfolio fits well within your financial plan. And if you're not sure what all that means, well, then it's time for you to get financially fit with financial intelligence training. I'm Al Abaroa. Thanks for watching.